What if I told you that a single street, just 8 blocks long, has the power to crash economies, create billionaires, and decide the fate of millions of lives? It doesn't grow crops, it doesn't build houses, yet the decisions made here can determine whether people retire comfortably or lose everything overnight. Wall Street isn't just a place, it's a force, one that has fueled America's rise, triggered its greatest crises, and shaped how money controls the modern world. Today, we're uncovering how a small corner of Manhattan became the beating heart of American capitalism and why its influence reaches far beyond New York into every paycheck, every home, and every future. Well, it's so much more than that. It's the engine room of the American economy, a place of incredible ambition, innovation, and sometimes controversy. Let's dive into how this one small area in downtown Manhattan has shaped the entire United States. It all started way back in 1792 under a buttonwood tree. A group of 24 stockbrokers signed an agreement creating the first organized stock market in New York. Their goal was simple: to trade government bonds which were used to pay off the debts from the Revolutionary War. This was the birth of the New York Stock Exchange. In these early days, Wall Street was funding the very building blocks of a new nation. Think about the massive projects that connected the country. Canals like the Erie Canal, and later thousands of miles of railroads. Where did the money for all that steel and labor come from? A lot of it was raised right here on Wall Street through selling stocks and bonds to investors who believed in America's future. As America entered the Gilded Age in the late 19th century, Wall Street's power exploded. This was the era of industrial titans, names you still recognize today, like Rockefeller, Carnegie, and J.P. Morgan. These weren't just businessmen, they were empire builders. They used Wall Street to create massive corporations called trusts that dominated entire industries like oil, steel, and banking. J.P. Morgan was so powerful that he personally bailed out the U.S. government during a financial panic. This concentration of wealth and power made America an industrial giant, but it also created huge divides between the super rich and the working class, leading to major social and political battles. Then came the Roaring '20s. The stock market seemed like a one-way ticket to wealth. Regular people, not just the rich, started buying stocks, often with borrowed money. The excitement was everywhere. Stories of elevator operators becoming millionaires filled the papers. But this speculative bubble was built on shaky ground. In October 1929, the party came to a sudden, catastrophic end. The market crashed, fortunes were wiped out overnight. This wasn't just a Wall Street problem, it was a national disaster. The crash triggered the Great Depression, the worst economic downturn in modern history. Millions lost their jobs, homes, and savings. The dream of easy money turned into a decade-long nightmare. In response to this devastation, the government stepped in. The New Deal era brought a new wave of regulations to tame Wall Street. The Securities and Exchange Commission, or the SEC, was created to act as a financial police force, ensuring transparency and fairness in the markets. The Glass-Steagall Act separated commercial banking from investment banking to prevent banks from making risky bets with depositors' money. These rules were designed to prevent another 1929 and restore public trust in the financial system. For several decades, Wall Street operated under these stricter guidelines, and the American economy experienced a long period of stable growth, often called the Great Compression, because the gap between the rich and poor narrowed. The 1980s marked another dramatic shift. A new philosophy took hold: deregulation. The government began to roll back many of the rules put in place after the Great Depression. This unleashed a new wave of financial innovation and risk-taking. It was the era of greed is good, leveraged buyouts, and junk bonds. Wall Street became faster, more global, and infinitely more complex. Investment banks grew into financial supermarkets, and traders made fortunes on complex financial products. This era supercharged the economy in some ways, but it also planted the seeds for future crises by reintroducing high levels of risk into the system. The rise of technology in the 1990s and 2000s completely revolutionized Wall Street. The dot-com boom saw a frenzy of investment in new internet companies. Trading floors, once crowded with shouting brokers, were replaced by servers and algorithms. High-frequency trading, where computers make thousands of trades in a fraction of a second, became the new norm. This new tech revolution also brought investing to the masses like never before. With online brokerage accounts, anyone with a laptop could buy and sell stocks from their living room. Wall Street was no longer a distant, exclusive club. It was on everyone's screen. This new, deregulated, and high-tech Wall Street eventually led us to the 2008 financial crisis. The crisis was rooted in the housing market, fueled by complex financial instruments called mortgage-backed securities. Banks bundled risky mortgages together and sold them to investors around the world, often with misleading ratings. When homeowners began to default on their loans, the value of these securities plummeted, causing a chain reaction that brought the entire global financial system to the brink of collapse. Major investment banks like Lehman Brothers went bankrupt. The government had to step in with massive bailouts to prevent a total economic meltdown. The crisis plunged the country into a deep recession, cost millions their jobs, and shattered trust in the financial industry again. So where does that leave us today? Wall Street has become an inseparable part of American life. It dictates our retirement savings through 401ks, influences the interest rates on our mortgages and credit cards, and determines whether companies are hiring or firing. The rise of fintech and commission-free trading apps has made it even more accessible, bringing a new generation of retail investors into the market. We've seen this with the meme stock phenomenon, where online communities have challenged the power of big hedge funds. From financing the nation's first canals to creating the complex global markets of the 21st century, Wall Street's story is the story of American capitalism itself. It's a tale of incredible progress and innovation, but also one of risk, inequality, and crisis. It has created immense wealth and opportunity, but its failures have had devastating consequences for ordinary people. Understanding this history is crucial because the decisions made on this one street in New York continue to shape the lives of every single one of us.